Hi, I'm Anthony, an asset protection and tax attorney,
And I'm Zachary, a CPA.
and you're listening to the Wealth Planning Podcast with Brister Law. I'm about to turn it over to Zach. He's going to lay the groundwork for today's episode. I think it's going to be a really good one and really relevant to a lot of you guys.
All right, guys. So today we're calling this the Side Hustle Seminar. And what this kind of stems from is I have a bunch of friends in the consulting workspace that are taking side work, and we want to help you address those issues. So the main thing we want to address, or the main type of worker we're talking to right now, again, like I said, is someone who is taking side work. So there's a lot of type of works you could be taking. The main one is I have a lot of friends that are working, say, as consultants for softwares, and they get clients reach out for them on the side for business that they can't handle at the work, and a lot of them, their main job allows them to take this work. Um, the way you'll want to handle this kind of depends on how much money you have coming in, but we'll kind of talk about some where to get started and the deductions you can take to make the most out of this money.
I just wanted to congratulate you guys for taking that first step and starting a small business and opening up the wonderful world of deductions and the tax code. Uh, First thing we're going to do is really we need to understand what the difference between an employee and an independent contractor or 1099 worker is.
Cool. So, like Anthony said, we really want to talk about the independent contractor versus a true employee. This is a question I get a lot. I actually was at a Christmas party last night and talked about this for the better part of an hour. Um, Whether or not someone's a employee or independent contractor, the probably biggest difference is control. Like, do you have to come to work at a specific time? Do they tell you exactly what to do, or are you given a task that you go and do?
Yeah, Zach, I agree with that. Really, you need to look, and the first thing you should look at is do you have a contract, and what does that contract say? Does it stipulate all of those things, like you said, control, or are you a little bit more free? Um, and also, are you getting paid into a business or are you getting paid to your personal? Really, the big difference for you side hustlers, or 1099 workers is the tax implications. And really, it's the being able to take deductions, one, which is a benefit to you, but also if you're a 1099 worker, it's being responsible for the self employment tax, which is the Social Security Medicaid tax. And that's 15.3%. When you're an independent contractor, you're responsible for all of that. When you're an employee, your employer pays half of it, and half of that comes out of your check. So a lot of times people work as an independent contractor, get a 1099, and they're not thinking about that.
Yeah, I think that's a real important point, Anthony. The biggest distinction there again is that 15.3% that essentially half of that you're getting taxed on that you wouldn't be getting taxed on otherwise. When taking those things into consideration, it's really important to go ahead and meet with a tax planner, or you can take advice from people like these podcasts to decide how are you going to address those things, because how are you going to offset that? And I think the big way that you can offset some of that is talk about some of the deductions or expenses that you can offset it with.
Yeah, and again, you have to distinguish if you're an employee or independent contractor. Employees, you really don't get to deduct much, if anything. The tax code changed and you're no longer able to take that. But independent contractors, again, you can take advantage of all the deductions available as long as they're ordinary and necessary for your business.
Yeah, again, you're a contractor, but really you need to treat it like your own business at that point. You need to look for the expenses that are valid that you're paying to get that work done and start expensing that. So once we decide what our employment status is, now it's kind of a good idea to decide the entity structure. And so I think a big one that we'll start with is why you should or should not form an LLC.
So, first off, I just want to tell you guys that having an LLC does not change your ability to take deductions. What an LLC does is it gives you asset protection on the state level for any type of negligence or a contract breach, or really anything that you might be sued for, as long as you're following the corporate formalities. So to answer your question, first, should you form an LLC? Ask yourself, what kind of risk is in my business? How much is my business making? And do I want to protect my personal assets from these business risks that happen while I'm operating it?
Yeah, I agree. And I think the next thing to consider if you do end up forming the LLC, and especially if you're a sole proprietor, people don't think about this, is you need to go straight to the bank and open a bank account and then start separating your assets from there. And Anthony can go into this a little further being a tax lawyer, but you really want to distinguish what is your business and what's your personal stuff. And the easiest way to do that is just open a bank account and start running everything business related through that bank account.
Yeah, even if you don't have an LLC, it's important to maintain that separateness because you want to keep track of your income and expenses. But especially when you have an LLC, in order to respect the corporate formalities, you want to maintain that separateness and have all those business and income and expenses come out of that bank account. Okay, now let's say that you do form an LLC because you want to protect your assets. You need to decide what kind of election you want to make, or if you make an election at all. Did you know that a LLC can be taxed at least 4 different ways?
Yeah, well, I don't know if I know all of them, but I'm assuming it's LLC S Corp, LLC C Corp, can be taxed as a partnership and a sole proprietor. Are those the four?
Yes, exactly. And how you determine that election really determines how you're taxed. So sole proprietorship is when you own it 100%, or in community property states, you and your wife own that LLC 100%. This is a default election when you have one owner or a married couple in the community property state own it, and all of the income that comes from that LLC is going to be subject to the self employment tax. Next is a partnership. A partnership is a default election when you have two non related parties. And when I say non related, I mean non spouses. Um, at that point, the LLC's default election is going to be the partnership. It'll file a partnership return. And again, all of the active income from there is going to be subject to the self employment tax. Then we go into corporations. There's actually two types of corporations here: a C Corp and an S Corp. C Corps mostly are used for large businesses. The publicly traded companies are mostly all corporations. And really, small business owners, this isn't a great entity election because of double taxation. You have to pay yourself a salary, and then any type of net profits gets taxed at the corporate rate. And then if you want to take that money out afterwards, you get a dividend tax. So double taxation. If you're a small business owner, again, I don't recommend it unless you feel like you're going to grow this company and sell it later. Then it might be the right election. So the next we have is S corps. S corps are really good for active businesses, but you don't want to put real estate or passive income in there, and that's because of the self-employment tax avoidance piece. So with an S corp, what you have to do is you pay yourself a reasonable salary off your total income, and that varies throughout the field that you're in and kind of the roles that you do. Then on that next piece, you take the distribution on the remaining amount. The salary portion, you're responsible for the full 15.3% self employment tax. The distribution portion, you don't have to pay the self employment tax. So, I hear anything between a 30 to 40% is a pretty conservative salary range. But again, you just need to consult a professional, define your roles, and then find out what a reasonable salary is for that position that you're in. This is
Well,
really to optimize um, tax election for small business owners. when you're making over 50,000 a year, because it does add a little bit of complexity to your tax life.
Cool. I was about to ask that where you thought the threshold was to make that election. And something else I think you'd be great at addressing too is, do you have to make that S election right away at the beginning of the year?
You don't have to make it right away. There is something available called the retroactive S election. So if you go throughout the year and you're not really sure what you're going to make, you form the entity at the beginning, you're just getting started, and then at the end of the year you realize, okay, I have 50,000, 100,000 of income, then you can make that retroactive election. And as long as you pay yourself that reasonable salary, you can make the distribution and avoid some of that self employment tax.
Yeah, I think that's the biggest one, is trying to decide where that where you draw the line. And I think you saying 50K gives a lot of clarity for everyone. So if you're just making like 10 or 20K side hustle money, it's probably better to stay at a normal LLC. You're probably a sole proprietor, um, in the example that we're talking about. But again, you if the year goes really well for you, you have that opportunity at the end of the year to make that election switch. Sorry, I can't talk, everyone. The election switch, um, and then you're good to go with that. So the next one, this is something I like talking about more than Anthony probably, is tracking everything. How do you know how much expenses and how much income you have? The income's probably the easiest one to define, because you know how much money you have coming in, especially in these like consulting type roles. You're probably only getting paid out a few times a year for them. But what about those expenses along the way, and how do you track them?
Zach, what about if someone pays me in cash? Do I have to report that income? I get that a lot.
If you ask me if someone paid you in cash and if you have to report it, the answer is yes. No, I'm just kidding. It's yes, yes, without the wink. Cash is a gray area. People think, if it's not really a gray area, it's black and white, but people think if they have cash, they don't have to report it. Um, while it is harder to report cash, the law says you have to report it. So if you ask an expert, the answer is yes, 100% of the time.
Yeah, that's good to know. I get that all the time. So, um, how do you keep track with your expenses? What do you use, Zach?
Well, it really depends on how many expenses you have that you're trying to track. If you're someone smaller, let's say you're making like 10 to 20K in consulting and you're only getting paid out like 3 or 4 contracts, and throughout that year, even as you're trying to make expenses to deduct that are valid, you might not have that much. You could totally do it in Excel. Um, Now, what you want to do for sure, again, we'll go back to you're opening the other bank account so you can keep it separate and make it easy to define. So even though you're working in Excel, you still need to go through those bank statements, make sure that everything you're paying for in the bank is on your Excel and that they match. They call that a bank reconciliation in most accounting softwares, but you can do it in Excel very easy with a statement. And that'll kind of tell you, you know, one, what are all your expenses? Well, you can see them there very clearly. You should be keeping receipts and stuff also. Those are easy to file away. But a statement kind of tells you most of that anyway. Now, if you get bigger to where you have a lot of transactions, you should definitely consider using something like QuickBooks. And if you think you're going to be taking on something like payroll anytime soon, it makes that argument for QuickBooks even like more valid, because it's super easy for a sole proprietor to run their own payroll out of QuickBooks and do it correct the right way.
Yeah, I use QuickBooks for all of my business entities. Uh, you can upload the bank statements or I can feed in online, QuickBooks Online. I have a referral link in the description of the podcast if you're interested. Use it. Once you really get over and you can actually turn this from a hobby into a business, sometimes Excel just isn't going to get the job done. And it's nice to have the software.
So if you're an Excel guru, I mean, go for it. I know people running very complex systems out of Excel, but if you're not an Excel guru, QuickBooks is super user friendly. I mean, it's way more user friendly than trying to set up your own Excel where you track income, expenses, do depreciation schedules if you have stuff you need to depreciate and all that. So I would argue for moving to QuickBooks as soon as you can, unless you're an Excel guru.
Yeah, and Zach, really at the end of the day, what it comes down to is make sure that you can substantiate your income and your expenses. And all that means is be able to prove it, have your receipts, keep good track of your bank statements, and don't commingle personal expenses with business expenses. So you got your income tracked, you got your expenses tracked, and you're making a profit. How often do I need to pay taxes on this profit, Zach?
Well, that's a good question, Anthony. And unfortunately, the answer is quarterly. I believe the threshold's if you owe $1,000, correct?
Yeah, it's something like that.
Yeah. So,
Um,
so if you're going to owe the IRS more than $1,000, and that's taking the side work into account, you need to make these quarterly estimated payments.
yep, and the only way that you're gonna be able to make these accurately is by keeping track of everything. So after that, uh, let's talk about the fun stuff. Let's talk about deductions, Zach. What are some common deductions that you know that you can take as a 1099 employee?
Cool. So I mean the most common ones, mileage reimbursements. Now you got to remember that driving to and from the workplace does not count as a mileage reimbursement, but there are a bunch that you can take. The next one I would argue, Anthony might not like this one as much, is referral meals. If you're taking clients to meals to earn business, those are valid expenses. Now there's some limitations to that, so make sure you talk to someone before you just claim all of these. Yeah, and after that, I would say the next most common one is probably the home office deduction.
Yep. You know, if you're an Uber driver and you're getting a 1099, you probably can't take the home office deduction. But if you're running your business out of your home and you're using a space that's specifically designated for that business, definitely take the home office deduction. And then just a few more common stuff that you should take. Always, if you're paying for insurance, any type of licenses that you need in your business, property taxes, professional fees, so paying your accountant or your attorney, be sure to deduct those. Any type of maintenance or repairs on your business or equipment. Um, Travel, if you have to go meet a client somewhere, or you're going to a business conference, or you're having an annual meeting somewhere, be sure to capture that in your business.
Yeah, and another really good one is your cell phone too. Especially if you have a spouse that has a cell phone, only one of you has to have one per the IRS. So the other one's deductible as your business expense. But yeah, actually, that Uber driver example, flipping it the other way around, that cell phone is actually a valid expense for them because they are using it the whole time they're Ubering. So if you have a spouse that has a cell phone, let the business eat the expense of your own cell phone.
Yep. And really, again, it just comes back down to, is this expense ordinary and necessary and also reasonable to your business? And there's a lot of different ways that you can deduct something in a business. You just have to be sure to qualify using that rationale.
Yeah, and before we finish expenses, I think the most important one, the easiest one to air quotes abuse or that you can get the most out of is probably marketing. There's a lot of things around marketing you can do, like getting print materials or, say you want a shirt with your company's logo on. Those are valid expenses, especially if you're taking that shirt to go meet in the office with someone so that they see your company looks professional and stuff. Your website's a really great one. Any social media ads that you're doing to try to get more clients. So you just really got to be aware of that marketing bucket because that's a really great one. It's a really good tool to get more clients and is probably one of the most beneficial expenses for most small businesses.
Yeah, Zach, I agree. You got to spend money on marketing. so you can get new clients and make money.
Yeah, spend money to make money. I like it. Yeah, everyone. So, kind of in conclusion, if you're under 50K, you do want to go ahead and open up that LLC. At least put that barrier between you and the business. Make sure you're separating everything all the time. That extra bank account's very important because it's a really good way to distinguish the difference. Don't commingle assets. And then if you're above that 50K, you should really consider maybe going into the S corp mode so that you can save on the self-employment tax.
So, with that, I think we finish up our side hustle seminar. I hope it was helpful. And thank you for listening to the Wealth Planning Podcast. Again, my name is Anthony Brister.
And I'm Zachary Ash.